Hey, welcome back to Two Super Guys Trade Stocks. I'm Dale.
And I'm Vinny. We're going to talk about Michael Burry, our main man, talking about China valuations and why they're historically cheap despite the massive growth in the economy over the last couple of decades. I know a lot of people don't want to hear this, but we'll see.
All right. Two Super Guys Trade Stocks. This is a pretty wild tweet that he put out.
So I put it through the Vinny Michael Burry translation machine, and this is what I came out with: is basically saying China is cheap.
Okay. All right.
All right.
Solid.
Yeah, this is the actual tweet. You gotta kind of unwind it a little bit here, but meet the new boss, same as the old boss. I hinted the fact that Xi Jinping is still the ruling kind of administrator for the Chinese Communist Party in China. But he said the Hang Seng recently hit a 1997 level. So this was basically we've come back to what was a peak in 1997. He goes,
Right.
25 years in between, the GDP has multiplied 18 times during that period. All right. Insane growth,
Yep.
yet the valuation is the same as far as when you look at the market cap. Right. Now, one flip side of that coin is that you could simply argue that they were way overpaying super early on. Like 1997, China was probably like Kathy Wood territory. Okay.
Oh,
Paying exorbitant prices, because
got
it's
it.
going to grow, man. I mean, this is the danger sometimes when you look ahead. The GDP literally multiplied 18 times, but you'd still be flat on your investment. Well, almost, assuming you were right about the future growth if you just paid too much up front. That's the danger.
You
See
would be
our Instagram
flat
video.
on your investment if you didn't sell. I mean, like, if you just sold last year, you still made like 100%.
Yes. Yeah, exactly. But the valuations back then, he said, this is for the whole market. You're looking at a 20 PE, 10 times enterprise value to sales, 3 times tangible book value. And now we're down to 7 times a PE, a 1 time enterprise value to sales, and 1 time tangible book value. That's insane. And then he said this thing about the three of the four last premiers serving 3 terms.
Yeah,
Uh,
actually, that part was funny because people were real mad that he got reelected when turns out 75% of the time they served 3 terms anyways. So I don't know what they were thinking. I don't.
Yeah, I mean, I guess it's always in how you spin it because Premier is a different position than what he's talking about here, so it gets a little bit dicey there. But this is a chart he actually put out with the tweet. So this line right here is back to the valuation we reached with the Hang Seng Index, and the first time that peak was touched there was 1997. It's been kind of rocky. Like the last time you could have gotten it at this price back here, you're looking at what is this about 2008 during the Great Financial Crisis. So
Yeah.
all of the economic growth that's happened since then basically no value.
You have to think, is it that the companies are less attractive or is that they're trying to factor in more and more risk, right? There's a
I
certain risk tolerance with China.
I agree. There definitely is, and like you want to be compensated very well when you're taking that sort of risk. When you talk about risk-adjusted returns and think about it from that standpoint, yeah, I completely get that thought process. The interesting thing to me here is there's a new article that came out this week talking about how the size of the Chinese economy may be overstated by about 60%. I don't know if you happen to see that headline.
Yeah, so
No,
that's the
no.
whole can you trust their numbers thing, right?
Yeah,
It's the whole
you know,
Luckin Coffee debate, but not just Luckin Coffee, the whole government.
Yeah, I have mixed emotions on that. On the one hand, that they certainly are not always forthcoming and with everything, but are they able to truly hide something that big? I saw David Blaine make the Statue of Liberty disappear once, but I'm not so sure that the Chinese Communist Party can hide the size of their economy with that much success. Okay.
That's fair. I think the other thing to factor into that is they're factoring in that some people are saying the Chinese economy is an entire like Ponzi scheme with the whole was it Evergrande
Evergrande
thing. Yeah,
real
yeah.
estate. Yeah, yeah. I mean, that's a very real risk. But the funny part is look how parabolic this chart just went here from 1997 onward. So like even if you were right about the tremendous growth that the Chinese economy was about to undergo, and that these numbers are all indeed real, you still overpaid ultimately at that time period based upon those valuations. My argument is that basically we are on a flip side opportunity now that yeah, obviously you have to be very prudent about your position sizing, that sort of stuff. Going all in on something like this speculative, you might as well just put it on weekly options, playing earnings from big tech stocks. But it seems like a prudent long term risk that I was within my risk tolerance, at least my personal perspective as a stupid guy on the internet. I don't know
Yeah.
about
Well,
you.
I think age has something to do with it too, right? Like a person in your 30s can maybe put 10% of your portfolio to maybe make 60, but if you're 60, maybe don't do it. Might be a
Yeah,
bad call.
I completely agree. There was actually someone that commented on our previous video about like our last Michael Burry Baba video talking about how it's like, oh, this aged horribly, horribly. Like it's been a month. Like, are you kidding me right now? It's like, yeah. My thesis was always that we had to get past this PCOB or County Oversight Board, which we might actually get some information on in December. But we had to get past that delisting risk, and then we could finally be valued more on the fundamentals of the business at that point, and less on the risk of it being a stock that you can no longer basically trade in liquid form.
I
Um,
wouldn't I wouldn't pay attention to those. Someone said that my TLT trade aged horribly because I only made 60%, and I could have
yeah.
made more. I mean, what a joke of a fuck. It's crazy.
I mean, we're stupid, the guys on the internet, but
Yes.
there's a lot of other people on the internet that have no
It's
idea what they're
only
talking about.
60%. Okay.
Yeah, it is only 60%. But this is a chart here from Yahoo Finance talking about how, over this entire length of time, you're going all the way back to the early 90s here, 250% appreciation in HSI. Compare that up here where you're talking about 800% on the S&P 500. Pretty ridiculous
Yep.
gap there, despite when you go back and look at the, economic performance. Yeah, don't get me wrong, the U.S. economy, absolutely crushes, but China has put up, even if you dock them for like this negative 60%, if you're actually a believer of that, still some ridiculous growth. I think you have to commend them for that.
Definitely some ridiculous growth. Let's take a look at some charts here. I just pulled up like three. These are zoomed out, so you can go all the way back to like as far as they'll let me. So like 08, for instance, for this is 10 cent. Okay.
Yeah.
So we are now coming down to a level where we have not been at this price since 2015. We dipped a little bit in 16, but 2015. Okay,
Yeah.
that's frankly kind of gross. Let's look at our boy Baba. Same, 2015.
Yeah.
Right?
Yep.
Gross. Okay.
Agreed.
And then JD is kind of like a competitor
Mm-hmm.
ish. Um,
Yeah.
Same thing, 2017, 2015. They actually went a little bit lower here and dipped, so they have not fallen as much. Neo, I think, is a terrible example, but what the hell? Why not? Let's just show it. We're chilling at $9. It was around that price when it IPO'd. It's come down so much on all stocks across the board. In fact, in day trading, there's just China days, right? Where the market isn't moving that much, but Baba, Neo, JD, PDD, Baidu down 9% a piece. So it's like much easier to trade, right?
Yeah.
It's the prices are pretty wild. The thing is, are you willing to risk more to make more, but you have to be ready to lose that money?
Yeah. I completely agreed. I mean, my largest holding is Apple, and my Baba in total between, I guess, the three different accounts is less than half of the size of my Apple holding. To give you a little bit of context,
So
and that Apple's largest individual holding. Okay, when we're talking about index funds, like that those are going to be in a separate category of themselves. As far as one stock, one name, it's Apple, but
I think I'm 28% Baba. I'm willing to go 40. So
wow, that's a little risky. I mean,
yeah,
yeah, yeah.
I'm
What
30.
percent was Fubo at its height?
A lot. Fubo is different. Fubo is a mistake. Highly admit that. All right.
All right. Yeah, I gotcha. Did you see the story that Everything Money Paul sold his Baba stock, by the way?
No, did he?
Yes, for tax loss harvesting purposes, he said
Oh,
he
that's
sold his
fine.
Baba stock and he bought Baidu, which is one I have never actually looked at them. I know they're theoretically the Google of China, but I don't know much
I
about
was actually gonna
their
do that
business.
too. I was gonna
Yeah,
do a video in December. I was just gonna buy JD because they seem to go up and down almost the exact same percentage for last year, so I feel safer.
interesting.
That's a
Okay,
video for
well,
another time. But
yeah, yeah. For another
definitely.
time, we'll comment on it. All right, catch you guys in the next one.